If I told you there's a small group in Australia that can quietly change your mortgage repayment, your rent, the odds you get a pay rise, and even what your Aussie dollars buy online, you'd assume I'm talking about the government. But I'm not. I'm talking about the Reserve Bank of Australia, the RBA. And the wild part is, most people think the RBA only controls interest rates. That's not what's happening. The RBA is closer to a remote control for the entire economy. And whether you own a home, rent, invest, run a business, or just buy groceries, you're inside its radius. Today, I'm going to show you exactly how it reaches into your life, through 7 channels, and why one RBA decision can ripple into everything you do for the next 6 to 18 months. Let's simplify the RBA into one sentence. The RBA tries to keep Australia's economy stable by keeping inflation low and steady, specifically 2 to 3% inflation over time. Because if inflation runs too hot, your money melts. If inflation is too low, the economy can stall, jobs disappear, and wages freeze. So the RBA's main lever is the cash rate target, the interest rate that influences what banks charge you and what they pay you. And right now, after the RBA's February decision, the cash rate target sits at 3.85%. But here's the important part. The RBA doesn't control your life directly. It controls the incentives around you, which changes how millions of people behave, which changes the economy, which changes your life. So let's break down the 7 ways it reaches you. Let's start with the pressure point most Australians feel within weeks: their mortgage. When the RBA lifts the cash rate, banks usually lift variable mortgage rates, and often new fixed-rate pricing follows. That means same house, same loan, higher repayment. But here's what most people miss. The RBA isn't trying to hurt borrowers. It's trying to slow down spending across the economy. Because when repayments rise, households cut back. Fewer upgrades, fewer holidays, fewer impulse buys. And that reduced demand is one of the main ways inflation gets pulled down. So if you've ever felt your budget tighten after a rate decision, that's not a side effect. That is literally the mechanism. If you rent and think you're insulated from rate decisions, you're not. Higher rates can push rent upward in a few ways. 1. Some investors try to pass higher costs through as higher rents. 2. New construction can slow when borrowing is expensive. 3. Landlords may sell, shrinking rental supply in some areas. But it's not a simple rates up equals rents up equation, because rates also slow the economy, which can reduce demand and limit how far rents can rise. So what happens in real life is messy and local, but the key point stands. The RBA can change housing pressure for both owners and renters just through the price of money. Here's where it gets quieter, but far more powerful: your job. When rates rise, businesses face higher borrowing costs and often weaker customer demand. So hiring slows. Expansion slows. Some businesses cut costs. Over time, that tends to lift unemployment, or at least reduce how quickly wages can grow. And the RBA watches this trade-off constantly. In its February 2026 forecasts, the RBA's table shows unemployment around the low to mid 4% range, while inflation is projected to remain above target for a period. Translation: they're balancing inflation control without crushing the labour market. So if you've felt the job market go from "companies are desperate" to "why is nobody hiring?", that's often monetary policy working its way through the system. Inflation isn't a headline number. It's the slow erosion of your purchasing power. Groceries, insurance, childcare, fuel, trades, services. The RBA's own view in its February 2026 statement on monetary policy is that inflation has picked up and is likely to stay above the 2 to 3% target range for a while. That matters because the RBA is basically saying, we're not done. the inflation fight isn't finished. And when the RBA believes inflation will stay sticky, it keeps financial conditions tighter for longer, which flows back into your mortgage, your rent, your job, and your investing returns. Now we move into the financial markets, where rate decisions reprice billions in seconds. Interest rates don't just change repayments, they change asset prices because they change what investors are willing to pay. When rates rise, borrowing is harder, property demand can weaken. Safe returns improve, risky assets can look less attractive. Company profits can come under pressure as spending slows. So the RBA can influence property prices, share market sentiment, and super balances, even if you never touch a mortgage. This is why you'll sometimes see markets move on a sentence from the RBA, not even a rate change, because expectations get repriced instantly. Most Australians never connect interest rates to the price of an iPhone, but they should. When Australian interest rates are relatively higher, it can support the Australian dollar because global money flows toward better yield, all else equal. And when the Aussie dollar rises, imports can become cheaper. Think phones, cars, appliances, fuel components, overseas travel. When it falls, imports cost more, and inflation can get worse. So yes, the RBA can influence what you pay for things that are priced globally, simply through rate settings and expectations. And this is the channel that makes everything else work: belief. The RBA doesn't just move rates, it moves expectations. If households and businesses believe inflation will stay high, they behave differently. Workers push for bigger wage rises, businesses raise prices faster, landlords raise rents, contracts get written with bigger increases. That can become a self-fulfilling loop. So the RBA uses communication, statements, forecasts, minutes, to shape expectations and behaviour. That's why the RBA's forecasts, like the inflation and unemployment outlook in the February 2026 SMP, matter beyond nerds and economists. They're a signal to the entire country. This is what we think is coming, and this is how we'll respond. So does the RBA control your life? Not in the obvious direct way, but it controls the price of money, and money is the gravity of modern life. It shapes what you can borrow, what you can earn, what you can invest, what you can afford, and how secure your future feels. The moment you understand the RBA, you stop being surprised by the economy and you start predicting it. If you found this explanation valuable, subscribe to the channel. New videos break down Australian finance, wealth, and the systems quietly shaping your future. Like the video so more Australians can discover this, and leave a comment with what you want explained next. Your support genuinely helps the channel grow.